Friday's job report could be significant, predicting 190, and it comes in at 200, which isn't that much above. You can get a strong reaction because it came in above estimates. But nonetheless, that could take gold higher. And if it breaks and closes above, call it 2348, we could see a significant move of over $100 to the upside. If we see silver move above $32, which is what it challenged recently on a closing and sustained basis, and build a base there, then we might see the opportunity for pricing we haven't seen in a decade, which is between 32 and 40.
Technical analysis expert Gary Wagner emphasizes the significant impact Federal Reserve officials' statements can have on market sentiment, particularly regarding gold prices. He notes that technical analysis can help identify key levels where gold might pivot based on such statements and economic reports. Gold prices inched upward on Monday, driven by short covering from investors as attention turns to the upcoming U.S. jobs report. This crucial economic indicator, due later in the week, could provide further insights into potential interest rate cuts by the Federal Reserve. Jim Wyckoff, senior market analyst at Kitco Metals, attributes the modest gains to a combination of factors. We're seeing a little bit of short covering by the shorter-term futures traders and bargain hunting by the guys in the cash market, Wyckoff explained. Firm crude oil prices and a weaker U.S. dollar also support the markets. The upcoming U.S. jobs report for June is expected to show a slowdown in job growth compared to the surprising jump seen in the previous month. Wagner points out that the forecast of 190,000 new jobs, if accurate, could be interpreted as further evidence of economic cooling. He suggests that if the report meets or falls below this forecast, it could trigger a significant rise in gold prices, offering some relief from last month's $80 drop. Despite the initial uptick, the gold market faced renewed selling pressure on Tuesday morning. This shift comes as the U.S. labor market shows resilience, with increasing job openings indicating a relatively healthy employment landscape. Join us as we delve into Gary Wagner's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Sometimes if a Federal Reserve official sneezes, it can change market sentiment. In other words, it's statements reading between the line, Fed speak, so to say, that is so critically important. So where the technicals can play a really significant role is to guide us to different levels in which if we see a pivot in terms of things that have been said or reports that come out, we have an idea of where gold could fall to, where it could rise to, and where it could pivot at. And you mentioned the jobs report, and I think that will be one of the most significant reports out possibly this month because we've had a slew of inflation reports, last week's PCE, the CPI, and when we compare it to first quarter performance where inflation was running very hot, we finally have signs that inflation is cooling. We got that on the last two readings, specifically the PCE, which is the Fed's preferred gauge to look at inflation. And so when we consider the jobs report, May came in, 272,000 new jobs, well above expectations. It moved gold $80 lower in a single day. It was significant. And the early forecasts for Friday's report is that it will come in a lot softer at 190,000 new jobs added. And that's one of the things that Powell addressed. He said that they are seeing signs that the economy is slowing, that inflation is cooling, and the labor market is contracting. And he said a couple of things. The first thing is he said he wouldn't be surprised or expects to see unemployment tick up. It came in at 4%, which was higher than previous readings. But the fact that the number of new jobs added, if that report bears fruit, in other words, they're spot on as they were with the PCE, that would be significant because the Federal Reserve says that they need to see more evidence, and what they're seeing is solid right now. They just need more of it. That would be the more of it, so to speak. So Friday's job report could be significant. If it comes in at 190 or below, we could see gold make a solid move to the upside, which would be a welcome relief from last month's report that took it down $80. Now, As it pertains to gold, we have recognized a pattern. And the first chart that we're going to look at is going to show that we've seen that pattern appear before. And that is this pattern that occurs really between November, December, all the way up to about the end of February. And it's a descending top, meaning you get a series of lower highs, but you get a flat bottom, in other words, equal lows. And this particular pattern, as you'll see on our next chart, can indicate a breakout to the upside or downside, but it depends where the trend was previous to the formation of this pattern. So in the case of this one instance, we had a strong uptrend. We had gold coming from about 1900 in October, hitting this first high at 2100, correcting and then moving to about 2200, and then having these series of lower highs equal lows. And once it broke out, we had basically a parabolic move up. And I think we covered this on one of our shows, and that was this bull flag. And the bull flag is another type of consolidation pattern. And it's a bull flag because it's coming from an uptrend. And again, it's continuation, which brings us to our current take on gold, which is this. This is the stuff we talked about before. And then, of course, we had a series of two all-time record highs, the first one on the 19th of April and the most recent one on the 20th of May, taking gold. This is futures, of course. This isn't spot. And so once again, we've got that descending top, a series of lower highs, and a flat bottom.
According to FX Street data, silver prices made notable gains on Wednesday. The precious metal traded at $30.5 per troy ounce, a 1.75% increase from Tuesday's price of $29.53. This upward movement contributes to silver's impressive 26.27% growth since the start of the year. Technical analyst Gary Wagner offers insight into the recent price action of silver and gold. Currently, while gold has been consolidating with a series of lower highs, silver has seen both lower and lower lows, Wagner explains. He notes that silver recently touched a level just above $29, forming a doji candlestick pattern, which could signal a potential trend reversal. The relationship between gold and silver, as measured by the gold-silver ratio, also shifted slightly. On Wednesday, the ratio stood at 78.03, down from 78.89 on Tuesday, indicating that silver has gained some ground relative to gold. While silver made gains, gold prices remained relatively stable on Tuesday, fluctuating within a narrow $10 range. This steadiness comes amid a complex economic and political landscape. European stock markets experienced a downturn as investors braced for upcoming elections in the UK and France. Let's get back to the interview.
Gold and silver used to move in a very tandem nature, with silver outperforming percentage gains on the way up and having larger declines on the way down, percentage-wise. However, gold ran to a series of all-time record highs recently. Silver has not broken above $30 for the longest time up till recent. And if we look at it historically, we've never seen silver replicate the kind of action we saw back in mid-2011 when gold hit a all-time record high of, I think it was $1,911. Phenomenal move to the upside. Silver pops to $50. We've seen that twice in history, but neither occurrence has happened in the last 10 years. So when we look at what's going on now, we've seen, whereas gold was trading sideways, consolidating with a series of lower highs, we got that in silver, but we also got these lower lows. And just recently, we had silver hit a level which is just above 29, call it 2907, and it formed what's called a doji. And a doji is one of the single most important Japanese candlesticks. It's a market session on a daily chart. Obviously, it's a trading session during the day in which the open and close are identical or one or two ticks apart. And what that is signifying is that at no point during the trading session were the bullish faction or the bearish faction able to dominate price action. When you get a large red candle like here, the bearish faction was able to not only control price action but to move it significantly. The same with the strong uptrend like here. But when you get something like a small bodied candle in which it opens very, very near the close, after a defined downtrend, we look for a pivot or key reversal. Because what that's saying is the bearish faction were in firm control of the market. It really traded within this channel. It hit this low, but on this particular day, Wednesday, the 26th day of June, neither the bullish faction nor the bearish faction were able to control price enough to have it move in any substantial manner. And then we saw small but consistent moves to the upside over the last 4 trading days, but they're very, very small. In fact, one of the best charts we can use is called a Henkinashi, and that really is an excellent way to help us determine the strength of a trend. So, for example, if you see the market moves up here, you get a series of dojis here and a small correction. Then you get that doji. You'll see it a lot at the top. But look at the body size at the beginning. That trend has got a lot of fire behind it. When it starts to get a little price or top heavy, notice you get upper and lower wicks. And again, with the dojis, you get dojis here. You get them at almost every significant top and bottom. And so we saw that recently. And that, to me, said that we could be headed higher. However, what we didn't see is any strong conviction. In other words, these candle sizes are very small. And lastly, what I want to point out, and we've got to go to a much longer term chart, like a weekly or monthly, and then really compress it. The first thing I want to show you is that this move here to well above $32 per ounce was significant in that it broke above all of these tops that came in through 20 and 21. And that's the first time. It challenged it, but it didn't effectively take that out.
Given the current market conditions, technical indicators, and macroeconomic factors, how do you foresee the relationship between gold and silver evolving in the coming months? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.